Hey guys, today I'm going to give you an update on why you should absolutely 100% avoid the GameStop, AMC, Naked Brands, other craziness that's going on in trading. I'm going to give you specific reasons, specific stats from my notes and over here on why you should 100% avoid these trades unless you're 100% willing and able to lose the money. Before I get to that, though, I need to let you know that you can get this series as a podcast anywhere in the world for free on all major podcasting platforms: Stitcher, Anchor, Spotify, iTunes, SoundCloud, and more. You can get this as part of the I Love Value Investing podcast anywhere in the world for free. And if you're looking to learn how to become a better investor faster, you can make sure to stick around to the end so you can get access or learn how to get access to a few of my resources for free. Okay. So, probably in the last 2-ish weeks, I've been contacted by no less than 15 people now about trading, sorry, my cat just jumped on apologize about that, about trading, whether they should do it or not, whether they should, the money they made from it, all that. Just in the last probably 3 days, I've been contacted by around 10 people, 8 to 10 people, asking about the GameStop situation and or should they invest in it. I'm going to stick to should you invest in it situation today, because I'm going to let the situation play out before I give my full thoughts on that. That'll be another video. But should you invest in GameStop or AMC or any of these other stocks that are going freaking crazy? No. Unless you are 100% willing and comfortable with the fact that you have a high likelihood of losing 100% of your money. Why? These people that are buying GameStop haven't even analyzed GameStop. So let me give you some context. There's a fight between hedge fund billionaires and traders on sites like Reddit and Twitter. Frankly, I don't know why. My dad asked me why they're fighting over GameStop. I don't know why GameStop is the stock that they're fighting over. I don't know. A lot of this boils down to, though, is people are shorting GameStop. Hedge funds are shorting GameStop because they think it's going to die. So, and I'll give you some context into that in a little bit. Hedge funds are shorting GameStop because they think it's going to die, because its business model got essentially, or is getting, sorry, I'm trying to block my cat over here from jumping on the table again, is dying. GameStop used to make a lot of money from gamers like myself. I used to frequent with their stores, trying to trade in old games that I beat for credit, in-store credit, to buy new games, or new-ish, new used games, whatever you want to put it. The model was extremely profitable for GameStop. They would say, let's say you bought a new game for $60. You beat it in 2 weeks or a month. You trade it in for $30 for in-store credit. They would then resell that game for, let's say, $50. So they make the spread in between that, but they'd also make this multiple times on thousands of games, because, again, gamers forever, unless it's some kind of rare game they're collecting, typically don't keep games. They want to play new games because new games are always coming out. So they would trade in their new game to buy a newer game, and in the middle they would trade in a game. And then GameStop would take that spread, in this case $20, and they would make a profit of $20 from the trade-in credit of $30 they gave to somebody, and the sale they got of $50 for reselling that game. They would get the spread of $20 in profit. Hugely profitable business model. That's dying though, because gaming in the, now I don't remember what generation it is, but the PlayStation 5, new Xbox, well, the PlayStation 5 itself has a completely all digital version, meaning there's no disc to trade in. There's no disc and no box. That's what games were played in for years. Disc and box, or back in the day, cartridges. So this digital future, which is coming, obviously it's here with the PlayStation 5 at least, is completely destroys that business model. Because if you have a digital asset, you can't trade it in at somewhere like GameStop. At least right now, they're trying to figure that out. But right now, you can't do that. So their entire spread of $20 per game and trade in on thousands of items over time is gone. They're trying to figure out and transition to a new business model, but that leads to its own problems. Most companies do not survive these kind of massive transitions in their business models. Think Blockbuster Videos when Netflix came along. Think, what are some others? Or Kmart when Walmart came along. Think with better technology, more efficiencies, more competitive advantages. Think Facebook or MySpace when Facebook came along. It was better, had more stickiness to it, had more competitive advantages. And there's others. There's a lot more. The entire retail market right now with the retail apocalypse and Amazon essentially helping to destroy normal retail because of their competitive advantages. They can get stuff to people right away. People don't even have to go into stores, especially with COVID, all that stuff. So very rarely do companies survive these transitions, these major transitions in their business model. That's number one. Number two is the GameStop economics because of their business model dying is also dying. To put that into context, again, I'm going to read off my notes over here. Where is it? In 2011, GameStop had $9.5 billion in revenue. In the last 12 months, the trailing 12 months period now, that's down to $5.2 billion. This is a fall of 45.3% in that time. That's a catastrophic fall in revenue, which has led to the following. In 2011, GameStop produced $663 million in operating profits, $408 million in net profits, and $394 million in free cash flow. In the last 12 months, these are all negative. Negative $198 million in operating profits, negative $275 million in net profits, and positive $150 million in free cash flow. But the only reason that's positive is because they issued debt. So in a real world sense, from their operational value, the killing of their business model, going to the digital future and getting rid of the disc-based and game-based trading that was their bread and butter, has just absolutely destroyed their business model. They're unprofitable. They went from huge profits to negative profitability or unprofitability. And they went from $9.5 billion in revenue in 2011 to $5.2 billion in the last 12 months. That's a massive destruction of value. And it's going to continue. This trend isn't stopping. So again, as my dad asked me 2 nights ago now, why are they fighting over GameStop? I don't know. I don't have a great answer for that. Again, hedge funds are selling it because they think the business is dying, which it is. And again, it's going to keep dying unless they can pull off a semi-miraculous change in their entire business model, which again, most companies do not survive. I get why the traders like GameStop, because a lot of them are my age and they grew up with GameStop and stuff like that. Another big part of this, though, is the anger of and perceived arrogance of the hedge fund billionaires shorting the stock. I see a lot of anger towards that. Again, I don't know really why they're targeting short sellers, companies that are targeting short sellers all of a sudden, and trying to make them lose money, but they are making them lose money. Reports are that Some short selling companies have lost billions of dollars. Some companies have said that do short sell reports, said they're never going to release a short sell report again. Brokerages, Robinhood, Ameritrade, among others, halted trading to let their hedge fund billionaire buddies reposition their trades so they wouldn't lose as much money. I'll get to that in a minute too, because that's the most disgusting part of all this to me. So, but I want to bring this back to GameStop before we get to that. Bad stock before this, was dying before this, terrible economics, unprofitable. Only way it's profitable is issuing debt on a free cash flow basis. Completely dying business model. Again, most companies don't survive that massive transformation. They just don't, because it's hard. In the face of all of this, again, bad news for the company, up for months for now. But in the last 6 months, GameStop stock, as of yesterday, again, this has changed now because it's going crazy. Stock was up just in the last 6 months alone, 8,567%. The stock chart goes from this to straight up. That doesn't happen. And I can actually bring this over here for you to see the chart. Okay, make this bigger. It's not letting me do it. There we go. Okay, flip. How do I flip my screen now? Okay, so what I'll just do is and take you to Morningstar. Again, I'm assuming these numbers have changed, but I'm going to take you to Morningstar to show you what I'm talking about. Oh, yep, these have changed drastically. So, this is the chart I was talking about. Stock pretty flat for most of the last 6 months and then essentially skyrocketing straight up. Stocks don't do that, ever. Unless there's massive manipulation. Or there's some kind of miraculous discovery for like a biotech company or something like that. Stocks don't do that. They don't go up thousands of percent on essentially no news, or in this case, negative news, unless there's massive speculation. What does that mean for you? That this is a mania, what's called a stock market mania. When stuff like this happens in the past, it ends badly for a lot of people, for many people involved on both sides, frankly. This is horrifically bad, or it's going to end horrifically bad for many people. Again, to bring that back into context, I'm going to bring you back over here. While this is coming up, there we are. Yesterday, to give you some context into how this is going to end horrifically, if you would have put $10,000 into GameStop 2 days ago now, you would have bought 33 shares for $300. In only a few hours, your stock would have been up to $345 a share, and you would have made just under $1,400. Pretty good. Especially in 1 day. It's really good. But if you would have continued to hold, you would have lost, again, as of yesterday, when shares were down 62%, you would have lost not only your original money, but you would have been down to just under $4,400 left from your original $10,000 investment. You would have lost 62% of your money in less than 24 hours if you didn't get out kind of at the top. Now again, as you just saw, that's changed again. Now GameStop is back up to $330 a share, or up 65%. Again, this shows the craziness of this stock, because again, there's no news. Their fundamentals are terrible. This is all emotion. This is all greed. This is all arrogance. This is all people trying to make quick bucks or to stick it to Wall Street or whatever they want to say they're doing. This is great for people who know what they're doing. If you're able and willing, do whatever you want. This is going to crush a lot of people though, because if you don't know what you're doing, there's a high likelihood that you're going to lose a lot of money. Why? Because if somebody is, there's a saying in investing, if somebody is selling something, if you're selling something, somebody else is buying it. And if you're buying something, somebody else is selling it. Usually there's a reason. And usually there's a different side and an opposite side, and there is typically what's called smart money on the other side. You need to think about people, again, I don't trade, but people like me who are in the markets on an everyday basis for years now are also making money off of this because they see what's happening. So are you willing to bet that you know more about when to get out of the stock profitably than people who have been doing this for years or decades or have great returns like I do or other investors? Again, I don't trade. This is why I don't trade, because literally just looking at these up and downs and thousands of percent and hundreds of percent, I don't like this. I'm a buy and hold investor, and I don't trade. But I'm just giving you an example of there's always somebody else on the other side of the trade. Yes, you can make money, but when these things pop, they pop fast and there's no warning. Typically, there's no warning. To give you an example, when the stock market crashed in March, nobody saw that coming. And it went down 30% in days. Nobody saw the crash, or few saw the crash in 2007 coming. And people who didn't see it coming lost 20, 30, 40% in a matter of days. Same thing in the Great Depression, same thing in the tech boom, all that. When these things pop, they pop really fast, and it becomes almost impossible to get out unless you sell at a lower and lower price. Because if people keep selling and selling and selling, which is what happens when the bubble pops, you continually get a lower and lower price. This is even crazier because now GameStop, with horrible fundamentals, having to transform its entire business model, it is now extremely overvalued. On top of all this, it has a PE of 404, price to cash flow of 113.5. Those are my favorite metrics to use, but I can't use my other favorite metrics because they're unprofitable on those metrics. On these metrics, which again, I don't put too much stock in most of the time, I look to buy stocks underneath 20 to consider them undervalued. So this means it's massively overvalued on top of the terrible business model, on top of the unprofitability, on top of the other stuff I talked about. When something is massively overvalued like this, it makes it enormously risky, and it means you should earn, or you should expect to earn, lower returns on its stock going forward. Why? Because the company's profits or value over the long term, again, this is short-term craziness, over the long term, it's based on its profits and cash flows that it produces. GameStop, again, is dying. It has negative profitability before the debt, or negative profitability on the free cash flow basis before you consider the debt. So this is a bad situation all around. It's going to end horrifically for people. And I just caution you, friends and family, if you're watching this, you have either followed me for a while or you're my friends and family. If you're going to get into this, which again, I recommend against, I want to make that 100% clear. I recommend against trading like this. I don't do it. I don't recommend anybody do it. Unless, the only caveat, unless you are 100% comfortable with potentially losing 100% of your money. Meaning, think of this, and I talked with a colleague about this the other day, and he gave me an updated reference. What I used to liken this to is buying a lottery ticket or gambling. But he made a better point. This is like buying a lottery ticket, but it's a $50,000 lottery ticket if you're going to invest that much, and you have the potential very high likelihood of losing all of it. This is not investing. This is 100% speculation. This is 100% greed, sticking it to other people, emotion, arrogance, whatever you want to call it. This is not investing. So if you are comfortable with that risk, again, I don't recommend doing it. But if you are comfortable with potentially losing 100% of your money, I wish you luck. I wish you the best. And I hope you make money off of it. I also hope you get out before it crashes, because it's going to crash, because its economics are terrible. To give you more reason why I'm 100% confident it's going to crash, what happens when another stock comes up that people want to target? What happens when, in, let's say, 6 months to a year, when COVID is better? Let's say, what happens then? What happens in the meantime between now and then, when people's attention goes to something else and another stock, they want to target another stock? They will take some of their money out of the GameStop stock, which will lower the price. And if you don't know when that's happening, again, and pretty much nobody on earth does, you're going to get crushed. Because again, when people start selling, they're going to sell it fast, and they're going to sell a lot of it. And the prices are going to go down really fast, which is going to make it even harder to sell. So again, I caution you against getting involved with this kind of stuff. I've been asked a lot about this from friends and family. And again, highly recommend against it. Highly recommend against it. But if you are going to do it, make sure you're comfortable with losing whatever money you put into it. Because there is a high likelihood that you're going to lose the money if you don't cash out. Again, and nobody can time the market. Warren Buffett doesn't even time the market. No investor is great at timing the market. So I hope this has been helpful. I hope this has enlightened people a little bit. To give you some context, if you aren't one of my close family or friends, on why you should trust me when I'm talking about this. In the first 9 years of my career, I just finished up my 2020 portfolio review for the portfolios I manage. I've produced average annual yearly returns about 23.5%. You're doing really good if you do over 10%. Those numbers legitimately make me one of the best stock pickers in the entire world over the last 9 years. In the first 9 years of Warren Buffett's career, he's widely known as the best investor ever. He's done 24% per year. So I'm just slightly behind Warren Buffett. The reason I'm saying that, and again, I never talk about this stuff, is to prove to you that I actually know what I'm doing in the stock market and investing. So hopefully, again, listen to this advice. Don't listen to this advice. Most of the time, I don't give people advice like this because they don't listen and they don't care. They just are going to do whatever they want to do, which again is fine. The best I can do is give you my credibility to hopefully, again, not persuade. If you are comfortable with these risks, go for it. But what people don't realize is they're getting involved with this kind of stuff, and there are other people on the side of the trade, and when it pops, it's going to pop, and it's going to pop really fast, and people are going to lose a lot of money. And I want to try to save people from that, or at least make people aware of that, so they are aware of the risks. Because a lot of people just see a stock like this going straight up, and they just want to buy. Yes, that does work. You can make a lot of money doing it. I know people have made a lot of money doing it. But again, most of those people know what they're doing in the stock market. They've been in the stock market for a long time. They know the risks. So I'm talking to the people, again, friends and family who don't know these kinds of things. And I hope this video helped. And I hoped I illustrate some of these points pretty well. If I didn't explain something well enough, if you want a further explanation of something, let me know in the comments below. I'm sure I'm going to get some nasty comments from the people who love GameStop. Again, I grew up with GameStop. I like the store, but it's a terrible stock. It's, again, the economics are terrible. It's unprofitable. Its business model is dying or is dead, one of the two, and it has to completely transform its business model, which most companies don't do. Again, think Blockbuster. They tried to do that. Or Kodak. Kodak's another one. They tried to transition their business model after a massive transformation in their business, in their industry, and they failed. This goes on probably 9 out of 10 companies who try to massively transform their business due to technological disruptions, fail to do so. So the odds are highly against them of doing so. Again, I hope they do it. I like GameStop. I don't short stocks, and I don't own any stock long in a positive, or what's called going long in GameStop. I don't short stocks, never have. I don't necessarily agree with it, and which I'll get to my thoughts in another video, because that's another part of this that is frankly disgusting, is not necessarily short selling, but the government and the brokerage accounts ridiculousness, which again, I'll talk about in another video. But I hope this video's helped. I hope the context helped. I hoped the awareness helped, because again, I'm not trying to persuade you to do anything. I just want to make you aware of the risks. If you're listening on the podcast, like, love, share, subscribe. Really appreciate all that. We really also appreciate a review, because the more reviews, views, and listens we get on our content, the more people we can help. If you're listening on YouTube, again, like, love, share, subscribe, comment, all that good stuff. Really appreciate that as well. And also make sure to subscribe and hit the notification bell so you're notified every time we release new video, and release new videos all the time. If you're looking to learn how to become a better investor faster, sorry, somebody's coming into my room as I'm trying to finish up this video, is you can check out our free content at the links below. You can get 5 free gifts, including a valuation template I use to analyze every stock. You can get a free PDF copy of my book, How to Value Invest, and you can get a free copy of my guide, 7 Tips to Picking Great Stocks and 3 Times You Must Sell. You can get all those for free below. And if you're if you want to learn how to become a better investor faster, you can also check out the information for our masterclass below this. But until next time, have a great day. Talk soon. Bye.